I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. It is Saturday, June 27th, but before we get into some of the charts that we're looking at, want to let you guys know that we are running a friendly competition on Tuesday. That is the USDA report day, and if you can call the close for December new crop corn on Tuesday, you'll have your pick between one of these two cool New Era hats or your choice of the Nike golf polo that I'm wearing right now. Again, call the close for December new crop corn on Tuesday. You can submit your guesses right away today. Just email info@bluelinefutures.com. Again, info@bluelinefutures.com with your guesses and your name and the best way to contact you to deliver your, hopefully deliver your winnings. So Tuesday, mark your calendar, get your guesses in, and good luck to you. Now let's get into some of these technicals that we're looking at. The first chart that we have pulled up here is December new crop corn. Obviously it has been a tough road since the start of the year, but it really looked like we were starting to carve out a bottom, and I don't think it necessarily just looked like it. We started to get some confirmation of it as we started to stair step a little bit higher, marking higher lows and higher highs here on this breakout above previous support. Unfortunately, we weren't able to get this conviction close out above this 345, 350 area, which is extremely significant for new crop corn. This is previous support, now becomes resistance, as well as this trend line here that goes all the way back to January. We failed to mark higher highs, and that, I think, started to lead to a breakdown point, and that's what we talked about in the Grain Express from the beginning of the week. The fact that we could start to see the tide turn a little bit, and that's exactly what we saw. Lower highs led to lower lows, and the lower lows is what really triggered and accelerated the selling pressure through the back half of the week. So any optimism that anyone had has likely been flushed out of the market, and potentially that negative sentiment could ultimately lead to some sort of capitulation and relief rally. But I think these relief rallies going forward are going to continue to be sold with the fundamental headwinds largely staying intact here for the time being. The only thing that would really change our mind is if we got a conviction close out above trendline resistance here, which comes in, well, right now closer to 340. So that's going to be the new line in the sand. Bears in full control as of right now. And I also want to note that if you're new to charting and technicals, I like to keep it simple. The KISS strategy, keep it simple, stupid. You don't need to overdo it and draw trend lines and have moving averages every which way. That only clutters your mind and leads to a lot of hindsight where you say, oh, here's a line. Look at previous price points. I think that's going to be a good starting point for you. Charting can be as complex or as simple as you want. Again, I like to keep it relatively simple. I generally have a little bit more on my chart, but this is very introductory in what we're looking at. If you go overkill, you end up looking at a chart something like this, and you end up scratching your head. You don't even know what you're looking at anymore. So keep it simple. So we covered corn a little bit here. Let's move on to new crop beans. We had obviously a breakdown this week as well in new crop beans. We really failed to get out above resistance, which was previous support, again, on a closing basis, all the way back here from last May. That was previous support, breakdown point from here, and resistance. And we marked lower highs. We really failed to get out above there. And now we're right back down to this breakout point from the first part of June. That's going to be significant support. I think the bulls still have a little bit of an advantage here in the very near term. But if we break and close below this 860 level, I think that could really accelerate things. It would neutralize any optimism that we have left in this market. So from a risk-reward perspective, sure, I think there's an opportunity to buy down here at 860. But again, you're going to want to manage your risk appropriately, because if the bulls cannot defend 860, there's really not a whole lot until these lows down here a little bit closer towards 838 to 840. So I think this week's trade, especially with the USDA report on Tuesday, is going to be a big inflection point for the market and very telling for prices going forward. So that is kind of what we're looking at for new crop beans. And for the livestock guys, we got a treat for you, live cattle chart here that we're looking at. And we've been consolidating and coiling a little bit here. As you can see, we've been marking lower highs and higher lows, and this typically we look for this to lead to a bigger directional move, and we've been talking about that in our daily livestock roundup. We're getting close to that inflection point. If we are able to get a conviction close out above technical resistance, I think there's opportunity to go retest this 102 area that was a breakdown point here. Resistance in May, and I know we talked about in previous Tech Talks, it really goes all the way back to last fall. So a lot of significant technical levels up there. And on the downside, if we were to break below here, the first stop would be here at the low end of the recent range, closer to 93.5. But if that gives way, then I think you're looking for a push potentially back into the mid-80s. Now, where do we stand on this? We've been a little bit skeptical on the market, and the Tech Talk that we did do on live cattle was back here, and we said temper your expectations, especially with a lot of the fundamentals kind of leaning towards the bearish side right now. So we are leaning towards the bearish side, but are aware that there is risk to the upside. So we're going to be watching this very closely going into this upcoming week's trade. One thing that we're monitoring on the fundamental side is the outside markets, who are obviously seeing a spike in COVID cases, and that bled into the volatility in the outside markets, but it really didn't bother cattle too much just yet. But if we continue to see the outside markets slide back, I'd have a hard time believing that that wouldn't trickle in to some risk-off trade in the live cattle market. So that's kind of what we're looking at for these three markets going into next week's trade. If you have any questions at all, email me, Oliver@BlueLineFutures.com. Again, Oliver@BlueLineFutures.com, and I'll be sure to help you out. Again, get your guesses in for call to close. Also, we do have a new Ag Alerts program. I failed to mention that at the beginning. We did have 2 trade recommendations go out this week. On Monday, we had a bearish corn trade. It was a option strategy, limited risk option strategy. Unfortunately, we just missed the fill, so weren't able to get that on. But yesterday, Friday, we did get a new Ag Alert for a bullish position in Chicago wheat limited risk option strategy. If you want to learn more about that, again, shoot me a note, Oliver@BlueLineFutures.com. Have a great weekend. Thanks for tuning in. And remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thanks a lot.